What is going on, everybody? And in this video, we're providing a state of the market and stock picks for October 19th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, before even coming to this earnings, I've been talking about inflation and how it's been shifting, and it's gone into services and into rental units. So, again, inflation has died down in some aspects, but it is shot through the roof in others. And I've made that comparison, right, and understanding that the amount of money that's going out is obviously way more than the amount of money coming in, and that things are actually looking really bad, essentially for the next monetary policy. But before we get into that, what we need to focus on monetary policies on the second. So we do have some time before then, but also understand that services are going to skyrocket in this earnings play. And today is a good example of that because Netflix just made a shit ton of money and just destroyed earnings. But you have to also keep in mind that they lost, like, I think it was like 1.2 million subscribers in the beginning of the year. People coming out of the pandemic, they're going to cut everything, they're going to go travel. Now people are coming back in. Everything is expensive, right? If your rent is extremely high, you're going to look for other means of cheap entertainment. So you go to Netflix, right? And not just Netflix, but you can go to Amazon, you can go to Roku. Those are some other services that are going to benefit off of the Netflix earnings today into tomorrow, and see if that helps push the market up. Now we do have ASML tomorrow, which I think is extremely important. So you do have some chip manufacturing coming in there. You got Lam Research tomorrow after close, but the biggest one being Tesla tomorrow, and seeing where they land. Now, just because services is doing well, Tesla is not just a car company. They provide other services as well. So that's something to keep in mind and see where that is currently at. But I think that's going to be the big pivotal move going in the next 2 weeks. And I think we could really, really rally if some of these big tech companies can do well. You have to understand that the surge is going to help some tech companies. It's going to hurt some other companies. So I think you're going to see a wide gap between what's good and what's bad, and see really where these rate increases are really hurting people moving forward. Again, Netflix doesn't really have a high overhead, nonetheless. So another cloud company would also be Google. Netflix's ads has been good and back. So what does that tell you? A lot of the ad companies are probably going to do extremely well. That means Google took a massive hit. Expectations are way down because of the last earnings. Could actually explode and have a massive earnings moving forward. So Google is definitely one I want to keep an eye on. And then your other social medias like Facebook, Snap, even though Snap really hasn't quite figured it out since the whole Apple put restrictions on. It'd be interesting to see what Snap is on Thursday after close. I used to be a big fan of Snap, but I just think that blow from Apple just really it's going to take them a while to figure that out. So unless they show something different, I want to be investing in Snap anytime soon. But again, we have a lot of pivotal stuff. And the good thing is you're seeing some strength here, which is great. But you have to understand that there's such a high demand for things right now. People are paying astronomical prices for services right now. And so any service company out there is probably making a boatload of money. So that makes it look like everything's okay, but you have to also understand that just allows the Fed to keep hammering down rates and understand what other sectors are getting destroyed, and understand that we still need to be watching credit cards. We still need to be watching, the housing and mortgage loans and seeing where they're currently at, and understand where things are currently going. And perhaps this whole thesis that I've been talking about is even going to be pushed further down the road, potentially into next March, and maybe everything folds then. You have to understand, because right now things with the demand and services, it's making things look like we're strong, and maybe we are, but it's not bringing down inflation enough. So that's just going to allow essentially the Fed to keep hammering rates and think that's okay. and see where that leads us further down the road. Because there has been a lot of layoffs, and you have to understand a lot of these banks, they laid off a lot, and so they're making all this profit. Again, you have to cut a lot of people to protect your overhead. In the initial cut, yeah, you'll see it, but you have to understand in the next quarter, you might actually see it to be quite faulty at that point. So, again, we'll see. I'm not trying to sell you either way, but short term, I think we could be have a very bullish move going to the next core and going into the next monetary policy. Now you have monetary policy before you have core. So keep that in mind. And again, if we have a good Tesla, this could be a very, very big market rally coming out of this. If Tesla does do well, the rest of the market, I think, will follow, and then we could get a massive rip up. Not to say that a black swan can't occur and then correct us next March, right? So there's still really bad sentiment in the market, and so you have to keep that in mind. Again, I really want to watch credit cards and see what's going on there, but nonetheless, technical wise, I think we could still push up at least to the 38.50 potentially. Again, we're still against that trend. That daily trend, I think if we hit that, we could potentially start selling back off. Again, every rally we've had, essentially these have all been earnings rallies, and then we just sold off massively. I really don't expect anything different here. Another massive rally, then sell off big because people are getting scared of the Fed and inflation, and then it drives this fear here. I think you're just going to continue to see this for the rest of the year until that one big cataclysmic event occurs, or we get to the point to where inflation stops, comes down significantly to where the Fed goes neutral and then starts laying off interest rates, which I think is going to be for a long time. I don't think it's going to be anytime soon. Again, I think they still have to continue, and you have a lot of Fed members today talking about that same exact thing, that they need to continue to hammer rates. So with that being said, so looking for that, what's really interesting here when you start looking weekly and daily, you have this 200. We are fighting this. This is not saying this thing can't wick right back down here, but at the end of the month, you still got 2 more weeks. This thing could sell right back off into this thing. We're really fighting again that 3,600. Can we stay above it or below it? We tried. We thought we were breaking out here, and we wicked straight back in that week. This one was definitely a battle. This one we're trying again. Again, if we get a bad earnings, you can guarantee we're going to be back down by 36. So definitely be mindful of that. So the weekly is definitely a battle here. Monthly, you look at the monthly, we're really kind of holding and wedging here. So October really hasn't looked at the greatest, considering some of the other ones have done really bad. Again, this is the this one I point out in May, in which we essentially wicked on both sides and then just nothing but selling off. Again, I still think we got one more really strong leg down. It's just determining if that's going to be between now and Christmas, or it's going to be right in the beginning of New Year. Again, naturally, our natural cycles, we normally sell off pretty heavy around February, March. So just be mindful of that. Because after the new year, it's like everything resets and everything has about another strong month. And then after that Q1 earnings, our Q4 earnings start getting reported. Then we just kind of sell off after that, kind of reset the market for the new cycle for the new year. So which takes about a month, 2 months, or something like that. Normal, not a normal cycle. But we'll see how this plays out. We'll go from there. Bitcoin, I'm not going to go over. Again, it's holding the same time frames. So we're just kind of seeing how that does. Tesla, it's holding this 217 mark really well. Again, if they do poorly on this earnings, again, this big one, I don't want to play options on this because premiums are ridiculous right now. I will play a continuation of Tesla. If Tesla does really well and the market sentiment's good in general, I think this could really rip. Again, I think could potentially go up to 288 if it wants to start getting some gas. Again, if it breaks down, you have support roughly around the 185. So really kind of watching that there. Again, I'm not really playing Tesla until tomorrow night. I want to see how it does. So I'll give you more of an update tomorrow on that and how I want to play that. BA, again, looks like the market in general looks like a break retest. So a lot of these look like they could potentially sell off. I don't know if Netflix is going to be the one thing to hold everything up. I think, again, services are going to do very well. So again, any services tomorrow would be good to play continuation on. Roku, Amazon potentially, and Netflix potentially tomorrow as well. So watching those. ASML will be in the morning too. So all the chips and semiconductors will be one to watch closely tomorrow. I want to see how that does. ASML in the morning. JPM. Again, we got a break. Banks have been really strong. We're going to see if we can get a pullback to retest the 114 and see if we can finally break the trend of these downtrend breaks that we can actually break out. Again, this is the monthly I'm looking at. We've got 2 more weeks. So it's kind of misleading there, but the daily looks like a break. See if we can get a retest back down to 112. If we can, hopefully that continues our way up. Again, you don't want this just to straight shoot up. It just means you're going to have a more wicked pullback and when it does start to sell off. So GS, kind of same thing, pop, pullback. Did very well though. So again, we have to see how the rest of the banks do, the rest of the earnings do. So that's pretty much what we're going to be doing for the rest of these next couple of weeks to try to really determine what our plan is, what our goal is. Continuation on a lot of these is the best thing to play because they're easier to play. And then understand once we get a lot of these bigger techs, we'll understand where the market's at and where it is heading. Forward guidance is going to be very important on a lot of these. So with all that being said, if you made this far, I do appreciate you. Go ahead and drop a like button. And until next time, I'll see you guys later.